Welcome to Limit Up, the weekly capital market podcast. My name is Don Collins. I'm a chartered accountant and business advisor of 30 years and partner at Findex, a leading financial advisory and accounting services firm based in Australia and New Zealand. I'm here with Ian Reynolds, trader investor, former bank foreign exchange market maker, early investor in Bitcoin and tech founder. Welcome, Ian.
Hi, Don. How are you?
Very well. And yourself?
Yeah, good. Thank you.
Excellent. Making money in stressed capital market situations is tough. Typical investment portfolio will often fail. The world is moving into really challenging times as the US tries to address US $39 trillion in debt, contradictory fiscal and monetary policy, internal conflict and numerous wars. And the rest of the world starts to consider a new global reserve currency, a multipolar world, and aging demographics. So how can we understand what's going on in geopolitics and macroeconomics? Luckily, Ian is here with Siberia Capital's latest press release. Ian, is no news bad news?
Seems to be at the moment.
Yes. What do you think is the big issues going on now? Obviously, the war is continuing. The Strait of Hormuz is getting blocked, although ships are going through, but only if they go under the right conditions. And there's another strait as well being blocked. All sounds very much like bad news.
Yes, so the problem is that uncertainty is the investor's worst nightmare. It's been uncertain for, how long is it, 4 weeks now? So markets have obviously come down a bit. And there's a point at which investors all jump the boat. So I don't know when that's going to be, but there doesn't seem to be any resolution to this conflict coming soon. You know, all the stuff about boots on the ground and stuff like that, that's really, really bad news for markets. Whether that's a threat or not, you know, at least do it or don't do it, and then we can all deal with it. But not knowing is the worst thing.
All right. So Ian, Brent crude, we touched on the various restrictions in oil. What price is it now? What's it expected to go to?
$111 to be exact, it is now.
Right. And that's not going to go anywhere but north as such. That's a pretty big increase.
Well, I mean, we'll look in the charts at the minute, obviously, but it's been all over the place depending on what the latest news from Trump is. But markets are beginning to finally not play ping pong with Trump's news. So you either need to buy some or you don't. And given that, I mean, Australia, was it 600 petrol stations had run out or something the other day?
At least that, yeah, absolutely.
Yeah, so that's a week old, that news. And South Korea has had some sort of shutdown. You know, you got to pay up or not. And so likelihood, unless something happens, price is going to keep going up.
Which flows on to obviously all businesses, all economies, you know, what's been happening as a result of that.
Well, I think the risk-off framework is fully in action now. So if you're a business and you can't imagine what your energy costs are going to be, then you're not going to take any investment decisions. You're not going to order things that you don't need. You're not going to buy things that you don't need. It's just complete risk-off around the globe, I think.
Which obviously hits earnings, hits credit ratings, the like, etc.
Absolutely. Everything goes down slowly until something big happens.
Yep. And so is there an alternate to equities as a result? What's been happening with the other options that are available for investors?
So initially, when we saw this happen, gold got absolutely hammered as a very big country had to sell its gold reserves. I'm hearing this now that I'm in London, exactly what happened. So that was a liquidity event. Now that gold has corrected, let's say 20% to be rough, then it's now becoming a lot more, got a much better bid under it. Whereas Bitcoin, where people went to it seemingly initially, has now come off a bit. So I think we're seeing the revaluation of gold in the context of where we are now that those sellers have disappeared.
Yes. Yep. Okay. And what's Trump doing as a result? I mean, obviously, you spoke about markets and uncertainty and not reacting immediately to his announcements. What is his current actions and what should he be doing, or what are the other things the government there should think about?
So zooming out, every time the yield on the 10-year bonds in America gets near 4.5%, Trump has to back down on what he's saying, because that's the point at which game theory suggests the markets are going to melt down. So we've seen this 2 or 3 times already. The backdrop is $39 trillion of debt. Can't manage it. Rates going up. The cycle is getting faster and faster. And Trump's actions are getting wilder and wilder. So to answer your question, what he's going to do next, I have no idea whatsoever. And Trump does. The point is, Trump doesn't either. He's just reactive, and he's reactive because he's not actually the one making any decisions.
Yep. Right. And the government and the Treasury, are there any actions or levers they should be considering?
Well, they've been trying to get rates down for the purpose of making their debt, the increase in their debt less, but that hasn't been successful. They are still buying back their own bonds in the market to try and stop bonds going down faster. So they're trying to distort markets even further. But there's only a certain amount of time that markets will take before they just sell everything, and that includes gold, silver, everything, because if it's World War III, you have to be in cash.
Yep. So are we on the verge of a recession, selling down and high risk? Sounds like I'm hearing words like that in the media. Is that on the cards?
I think we've been in recession for quite some time. It's just the numbers in America are massaged to be nice about it.
Right.
All of the private credit mess, the commercial real estate mess, it's a big drag on all economies. GDPs around the world suggest very anemic growth. It's probably negative growth in reality. Unemployment's going up, but it hasn't exploded upwards yet. So we're, as per last week's communication, on the cusp of it being, very obvious to us rather than us having to infer it.
Yep. So you speak of numbers, and I'm not sure whether you wanted to go through anything else on your release, but happy to jump into the charts if you're ready to do so.
Yeah, the only other thing is, like, this week's been very light on content in terms of economic numbers, but that's back with a bang next week. So we've got all the ISMs in America, EU CPI on Tuesday. Of course, it's Easter on Friday, but we still have non-farm payroll, which is the big employment release out of America. So there's some stuff to come this week that the market's going to be interested on. And Iran warning of attacks on American universities. That's overseas American universities. As America prepares ground troops, was one link I put it in the press release just to, show you how wide this is going. Yeah. So have a look at the chart, shall we?
Yep. Okay, let's go to the charts.
Awesome. Give me a second. Tell me if you can see it.
I can.
Okay, so going left to right, this is Bitcoin. As you can see, it's really been doing nothing for the last month, but we got the bid when the war started, and now it's just drifting away. So its safe haven supposedly status that was in there doesn't seem to be true.
Yep.
This is Brent. So this is showing us this. It's just showing us it's actually up 60% crazily. since the war broke out on the 27th of February.
Yep.
And as you can see, prices converging on the double top at 120 odd. This is Brent.
Yep.
And, the pressure upwards is more. Who knows what's going to happen, but certainly it going down currently seems unlikely to occur because the pressure is upward.
Yep.
If we look at gold, here obviously is that big sell-off we were talking about. Massive correction, 20% correction. But now, okay, so that's consolidating. So that normally says we're going lower. But maybe things have changed. I don't know. We'll have to wait and see whether this consolidation becomes more of a bid. I would say that if things stay the same, it's going to have to go down because all things go down in a crash. But it's probably the one that will go down the least now. Silver equally has crazy charts, and we had the big sell-off and another one, and it's consolidating like gold. The big thing is the dollar, which, as we can see from this support line, has gone up, but it's gone up from 96 to 100. So let's say it's 4%. So way less than gold has gone down 20%. If you sell gold, you have dollars normally because that's how it's traded. So these are dollars that have been put back into the system by sales of gold, in my view. And you can see here that we're up at 100 on the Dixie, which is the dollar futures. And there are 1, 2, 3, 4, 5, maybe 6 times it's hit there if you include today. So is that going to break higher or is it going to break lower? I mean, no one knows the answer to that, but a resolution to this, higher or lower a lot, is on the cards right here, right now, as this triangle has to resolve itself. 10-year bond yields are doing the same as the dollar, just going up. We have a downtrend line here as well from back before this chart, which means it's tracking the dollar at 4.5%, which is there, let's say. It's perceived that a lot of bad things are going to happen. Illiquidity in the US Treasury market. US Treasuries underpin pretty much all big financial transactions and repos and the liquidity of markets. If this goes a lot higher, there will be carnage in all markets. Even if it's not real, it will be perception.
Right, okay.
So the 12% rollover on the NASDAQ. You can see the M-shaped top that we talked about previously is resolving itself to the downside now. It's a calm market at the moment as a correction, but if we get near a 20%, then that's going to be nasty and accelerating. And just go through the Dow Jones, where we've formed, a solid downtrend for the moment. And so, just reinforcing really all this, what I've been saying is that we'll switch out of this now, that markets have gone back to risk off and they're going to go down until we get a resolution on this war one way or the other. I think even if it was a military offensive on the ground, that would be a big shock, but at least the markets would learn to price risk off the back of it. You can't price risk off something you don't know about, which is the situation we're in now.
Right, okay. All dire bad news, and as you said, I don't think there's any resolution with that until there's more certainty about the outcome of the war and when. And would it be, even if that is announced, it won't immediately correct everything? Is there a lag?
Well, the knee-jerk reaction is investors sell things because obviously a ground war is so expensive. Vietnam brought America to its knees, had to go out off the gold standard in 1971, even before Vietnam was resolved. So here you have a modern Vietnam situation with a country that is insolvent. knee-jerk reaction down, then, investors can price risk. So is that a flow out of US assets? You'd think so. Is it a positive flow into gold out of cash? And that, I would think so. But knee-jerk reaction, then repricing. But it's better than just hanging around waiting.
Yeah, waiting for it to occur. Exactly.
And
looking forward. Sorry?
As it says in the press release, Trump has now dragged lots of other countries into it.
Yep.
And who else is going to get dragged into it? We don't know. We don't know nothing. No. That's the problem. We don't know.
Yep. And all that uncertainty, as I said, doesn't help markets or investors.
It won't help markets until there's a resolution one way or the other.
Exactly. So this week's, as you said, announcements, do you think there's going to be any particular joy in those, or is it just going to follow suit with the way the markets have been going?
Well, the main focus of the economic releases this week is unemployment, or employment, should I say. There's been lots of AI job losses. Economy has gone from 4% annualized in the US to less than 1%. If you look at, snapshots of the economy, can't see how the employment rate is not going to go lower. So, but the numbers are massaged, so it could be anything.
Yep.
But it's suggesting that it's not going to be a good number.
No, exactly right. All right. I'd like to say you're full of good news, but it's probably more realistic news for this week and the next week as well. So thanks again for today. Anything finally you wanted to add?
Only that markets are neither optimistic nor pessimistic. Markets are always realistic because it means money.
Yes. All right. Thank you. So that's another wrap of this week's Limit Up podcast. This and previous podcasts can be located on the Siberia Capital website. Alternatively, you can subscribe by accessing the link at www.siberia.capital/contact. Thanks again for everyone for joining in. Thanks, Ian.
Thanks, Don.